Good morning. This is the Pirate Traders Morning Show. I'm Paul, coming to you out of Houston. The big news this morning is unemployment claims came in as expected. It caused a bounce in the ES as well as the NQ. So they came in around 227,000 unemployment claims for the week, and that's pretty much in line. I've pulled up a chart that shows 2 years, and it's bounced between 200 and 250 for quite some time. And just as a matter of reference, I mean, during COVID times, it was at 700,000 from time to time. So obviously, for 2 years here, we've got a stable rate of unemployment claims. Not a lot of news the rest of the day. When I look at the markets, I go to Asia. I'll see that Asia is reasonably quiet. The Nikkei's continuing to go up. Hang Seng is flat. Shanghai is up slightly. So that's what's going on there. And the European markets are also in a bit of a bounce, all of about 1%. So that's good news for Europe, which all comes back to say, well, let's look at the volatility real quick. Volatility continues to drop. And if I look at the 1 month volatility, you can see that there was just that one spike, August 5th or so, when the Japanese market tanked. And since then, it has just come right back down. I did look at Deutsche World this morning. I didn't find much except for a story on Ukraine and on, well, Afghanistan is not really a story so much, but Hamas is always a story and what's going to happen with potential Iranian retaliation. We're kind of still waiting on that. And if I look at Al Jazeera, pretty much the same thing. Again, it's looking at what's going on in Gaza and what's going on in Ukraine. If I look at Reuters and go through what they've been watching this morning, it's pretty much the same thing. It's quite important that the inflation rate seems to be under control at this point. And that's really laying the groundwork for a lot of economists to get behind interest rate cuts at the Fed. That's going to be a massive impact on the U.S. markets and on the U.S. trading markets and also on the real estate markets. A lot of people I know have houses for sale, and they know that the buyers are waiting for interest rates to drop before they get into their mortgages, and they're just kind of sitting around. And once interest rates start dropping, and if we get into a virtuous cycle where they continue to drop, it's going to weaken the dollar, which will strengthen U.S. exports. And with stronger U.S. exports, more profitability for U.S. companies, and everything just starts zipping to the sky, I suppose. And could create, I mean, if interest rates can be dropped significantly over the next year or two, it would most likely create an economic boom. That was not a bubble, but was really truly based on an export boom and a consumer boom. That's a good possibility. Let's see what else was in there for these guys. I was talking with Charles earlier. We don't really know what's going on in China, but apparently things are dimming in China, and we'll see over time. It's important because China is really such a big player in global markets in so many different ways. They are a big consumer of energy, and they're a big exporter of darn near everything, including school supplies. I was buying school supplies yesterday at Walmart, and I think China and Walmart are doing just fine. Walmart reports earnings today. So I want to talk about Ukraine for a minute and just tell you a little bit about why I would talk about Ukraine. I actually have quite a personal history going back into the former Soviet Union. In 1980, I joined the U.S. Air Force and went and learned Russian for the Air Force at the Defensive Language Institute. And fortunately for me, I got to go to San Antonio instead of Monterey, California. But that made me a fluent Russian speaker in the 80s. And I got a solid background in the history of the Soviet Union and the history of Russia. And then in the 90s, once the Soviet Union fell, I went to work in Russia. and I worked in northern Siberia for 3 years on a rotation out of Houston. And then I worked for 10 years in Moscow. I worked for a telecoms company in Moscow, and I worked for a private equity fund for 9 years. So I've really spent a large chunk of my adult life in Russia and a large chunk of my life studying Russia and understanding it. I also met my wife in Russia. We had 4 children while we were living in Russia. We had them in the States. But I'm a fluent Russian speaker, and I've got friends who lived in Russia, did business in Russia for years. And that's what makes me look at the Ukrainian thing. And really, it has always been a head scratcher for me. Ukraine was part of the Soviet Union, and they really were totally integrated with Russia for a long time. The Russian language emerged out of Ukrainian, so to speak. And the idea that these guys would go to fight with one another is kind of like the idea to me that Mississippi would go to war with Alabama. And it's incomprehensible to me. It's a nonsensical thing. And I really have never really been able to put my head around it about why this was a great idea for Russia to do this. And now that the Ukrainians are able to step back and put together an offensive onto Russian territory, I think it will be a catalyst for driving the Russians to negotiating table in a realistic way, because I don't know where the Russians are going to come up with the supplies to actually counteract what's going on with an invasion. Larger picture is that if the situation between Russia and Ukraine gets resolved, and most likely will be resolved with support of Europe, then Europe will go on an investment binge in Ukraine and probably put at least $500 billion, $500 billion into Ukraine to rebuild it and integrate it into the European Union's sphere of influence. So longer term, I see this as being, when it happens, it'll happen. But Ukraine, it seems they really want to break away from what Russia's been doing for the past decade or two. And this is their opportunity to do that. And I don't think they'll blow it. So we'll see. Anyway, Charles is the better one to introduce what's happened to the ES this morning with the unemployment claims coming in line and inflation appearing to be under control. We seem to be moving up. So Charles, are you there?
I am here. Good
Okay.
morning, everyone. Paul, you can drop your screen share if you'd like.
Okay. Let's see if I can. There we go.
There we go. Now you can just stare at me while I go through the charts here. All right.
I'll start staring.
So basically, guys, those of you that have been following the channel for the last week, you know what I've been talking about. We have balance and excess, right? We had balance last week, moment, and just kind of focus on where price has been going. Okay. This momentum has been very, very hard to, it's just been very like slow, grindy, melt up type of momentum. And, I've been kind of giving my explanation for why I think that is. We have this very large node of liquidity at 52.50. It's been sitting there all week long. It has not moved. It has not moved for, news events or anything. It is just sitting there. So I'll repeat today what I've been saying because it has worked out till now, and I assume it'll keep working out, which is that the momentum on the daily is momentum and can keep going. So the market can keep making higher highs and higher lows on the daily, but it will probably keep being these slow melt, grindy sort of sideways days because this just messes up the day trading bots, right? They have to use the liquidity that's in the current order book to make decisions about what will likely happen in the market that day and how they should take those trades. Remember, these are all just computers, going based off of algorithms. So when those day trading bots see that they're less likely to let the market run to the upside. Essentially, they will take profits quicker. So this morning, the second that the jobs numbers came out and were better than expected, the market made a massive move literally in a matter of seconds and then got follow through to the upside. I am now afraid this was a big chunk of the move the market is going to make today. So this puts us in an unpleasant situation as day traders when the market opens in 20 minutes. What is the unpleasantness of this situation? Well, several contradicting pieces of information are coming at us right at the open. First piece of information, we have a large gap to the upside. Again, we don't know exactly where the market's going to open, but there will be a gap. So we got a large gap to the upside. The first thing that a large gap tells us is that the market is likely to try to fill the gap, but probably won't be able to fill the gap all the way. When there are large gaps like this, I would say anything over 10 points. Usually the market only does like a half gap fill, then it turns around and it keeps going. So we assume the first move is going to be to the downside towards yesterday's high, but we also assume they're going to find support somewhere in this range and flip and reverse and come back up. Okay, so that is sort of bullish in the fact that we'll probably get a gap and go, but it requires us to, first off, if we're shorting for a gap fill, take profits quickly. Take profits at the half gap fill, not the full gap fill. And if we're looking for a gap and go trade, if we're looking to buy for momentum, we have to wait for that pullback and we have to be ready to enter at a moment's notice, right? We don't need to hesitate today. If we want to buy a gap and go, as soon as we see support, we need to buy it because the market could just continue higher. Okay. So that is sort of the first tricky thing this morning for the market. Likely to get a pullback, but probably not all the way to yesterday's high. Now, if we don't find support and we get to yesterday's high at 54.88, we will look for support there. All right, we got a 45-degree angle on the lows. So that is very, very strong support. So I would say I am pretty much bullish. Again, bullish in this melt up territory type of bullishness anywhere above the overnight low. Okay, because there's lots of support inside that overnight range. There's lots of support in the upper end of yesterday's range. And so there's a very good chance the market will, if it does fill the gap, barely dip into yesterday's range and then reverse right back out. Okay, so all of that is bullish, but requires a little bit of caution. The other thing that I am making note of this morning that makes things a little bit tricky is previous balance areas. So if I zoom over here on the chart, you can see we had this little balance area between 55.25 and 54.40. Okay, this area was acting as a balance area. Now, often when you re-enter a balance area, so the market goes wherever it's going to go, and then it comes back in there, you get a rotation to the opposite end of balance. That is very common. But what else is common at a balance area high? That the market will grind and grind and grind when it's sitting at a balance area high. So both of those things make me feel like whilst we should be bearish today, this market is probably not going to run away to the moon. Probably a lot of the move to the upside that we were going to get, we already got pre-market. And so my first assumption, my highest probability scenario for today is basically a rotational day, up here around that 55.25 level. Okay. So they try to fill the gap. They get a half gap fill. They come back up. They get above the overnight high. They try to find support. Maybe they get a little bit of a move for an hour or so, and then it runs out of steam and we go nowhere the rest of the day. Okay. What would prove me wrong on either of those scenarios? Right. If the market gets below the overnight low, we're looking for a larger pullback in price. Plain and simple. Gets below the overnight low, things start to get bearish. Okay. Because that becomes a move from the balance area high to the balance area low, right? And if the market gets new buying above the overnight high and it holds it and it keeps it going, well, then we're going straight to the moon, right? First target, 55.49. Next target, 55.77. Okay. So that overnight range is going to play a very important role in any potential big moves that happen today. But like I said, I don't really see that as the most likely scenario. Okay, let's jump over and take a quick look at the NQ. It's a Q. Okay, exact same story with the NQ. Large overnight range. To me, that gap looks a little bit more fillable than the ES. So yeah, I would say, yeah, the support that I'd be looking for a bounce on is 19,230, and that's just above yesterday's high. So I think a gap fill on the NQ is a little bit more likely than the ES, but otherwise I see it exactly the same way, right? Which is that it's a large gap. If they can't fill it, it's a gap and go. If we get a gap and go, so if they start to push down, they find support and they come back up, the first target is the overnight high. Same as the ES. I assume we'll start to run out of steam there and kind of probably get cessation after the overnight high. But if they keep it going, the next target to the upside is 19,500, okay, which is that next large node of liquidity above price. NQ loves to bounce from large node to large node. So if they were able to break away from this one, they're probably heading to the next large node. And it will all depend on what momentum we get first thing when the opening bell rings. Okay, we got a couple minutes here, so let's just quickly jump out and look at some other charts. Let me know in the chat if there's anything you want me to look at on the candlesticks. I will just real quickly take a look at Russell. So earlier in the week, we were talking about how Russell was in this balance area. If they could break out, you could look for momentum. They broke out yesterday, they back tested. Now you can look for that momentum to the upside. Okay, so the next target on the Russell to me is coming back to test these lows in here. So I would say somewhere around 2180 is an area to look for resistance on the Russell. If they can keep that momentum going this morning, Bitcoin's still doing what it's been doing all week long, which is basically go nowhere. As we discussed, you can draw a trend line in here. Until it breaks that trend line, don't even look for the market to do anything, right? Overall, they are buying dips and getting nothing for it. They're not going to keep doing that forever. So if this last really big dip below 50,000 can't get some momentum up, they're going to need a larger pullback. And then we're looking to test like 45. Dollar, kind of boring. Treasuries, boring. VIX still coming back down. So that is obviously, you don't like to look at the VIX as like a exact correlation with the ES. It doesn't really work like that. But the VIX coming down just increases the odds that we could keep momentum going up in the ES. Gold doing its thing.
And just to interrupt, I mean, the VIX is also just, in this case, you can see it was clearly a measure of hysteria.
Yeah, it was just everyone panicked all at once.
And so for some people, that would have been a buying opportunity.
Oh, yeah. We call those people strong hands.
Yeah, that's who they are. And that's why they watch the VIX. Exactly.
Yeah. The people that when everyone else is panicking and everyone else is saying it's a recession, the market's going to crash, it's going to go 50% back or whatever. When the people that are buying in those moments, they are the strong hands, and you can see it happen. I mean, if you just look back, particularly in the last bear market, you could just see those buyers that would buy those big vicious dips. Man, would they get rips once they would buy in. Yep. They would get big moves to the upside because they're not getting squeezed. They're not exiting those trades. So, yeah.
But I think they've also got massive amounts of capital. So they may be buying without leverage at the end of the day.
Oh, absolutely.
So whereas
they're hedging.
Futures contract is maybe 3%. They may be holding the full 100% when they buy in.
Absolutely. And they're hedging too, which is the other trick thing. So those are the people who in here were buying puts and in here we're buying puts. And so then they take profits on those puts and use the free cash to buy more underlying shares. So, yeah.
Yeah, well, that's if they know everything. But I don't know if they can do both sides of it. They are the masters of the universe if they can do both sides.
Yeah, I think they do. I would say I wouldn't think about it like they perfectly time every trade, but I'm saying the stronger hands are the ones that on the way up, when everybody else has FOMO and is chasing price, they're hedging their positions, they're protecting themselves. And on the way down, when everyone else is in panic mode and freaking out and wanting to buy puts, they're the ones that are selling the puts to them. You know what I mean? So,
Well, and that probably, I look at that and I think of them as being larger investors that who have a goal of maybe 20 to 30% annualized in capital. I mean,
exactly.
30% annualized on your $300 million is not a bad day,
Yeah.
but they're not making 200% a week doing that. They really are shooting to make 3% a month
Yeah, no, and
on
that's
their
the
own
big
capital.
difference, right? Because when you have
Yeah.
that much capital that you have
Yeah.
to move in and out of the markets, you need events like this. You need
Yeah.
big market events that only happen a couple times a year to really take advantage of the market. Otherwise, you just have too much size, on a day-to-day
Yeah.
basis. Whereas a trader like us, we have such small size, we're not going to affect the market, trying to take big bets.
Which is one of the things I find attractive about futures in the first place, is that if I come up with the golden idea, man, I could get in with 5 contracts and nobody knows me and nobody cares about me and nobody loves me. And I can make millions of dollars with 5 or 10 contracts doing the right kind of trades.
Paul, just
That's
know, no
that's the
matter what
goal.
position size you use, I love you. Okay,
Ah, that's
somebody
nice.
loves you.
How many likes do we get though? Well,
22,
not bad.
22 out of 51. It's a start.
Okay, well that's not bad. That's not bad.
But
All
yeah, if
right.
you guys love Paul, hit that like. Somebody just unliked.
Oh, they hit it twice. That's what happened. I know that's what happened. Sure, they hit it twice. Oh well.
But anyway, yeah. So guys, just to wrap things up here today, as far as the ES and the NQ are concerned, like I said, it is bullish, right? We still have momentum. We have a big gap up based on, numbers, real world information. So there's no reason to think this momentum can't keep going, but I have a feeling it's going to be a very choppy sideways day. I would assume we're not going to fill the gap. If we do, I would look for support at yesterday's high in both markets. Any last things you want to mention, Paul?
We're good.
All right. Thank
We're
you
ready to
guys
go.
very much. And we will see you tomorrow morning. Bye, everyone.